Millionaires are going to be made tomorrow. And in this video, I'm going to explain how I expect to get my share of that. With Microsoft, Amazon, Meta, and Alphabet all reporting earnings tomorrow after the close, tomorrow is going to be absolutely nuts. Now, I'm not a financial advisor, so you got to do what you're going to do. In this video, I'm just going to explain to you my plan for tomorrow. But if we make the right decision, an incredible amount of money can be made. So let's just jump right in. So let's start with Microsoft. Last quarter, Microsoft beat on both top and bottom line, but the stock still dropped 10%. And the reason being was because the investor community believed that the Capex spend on AI was just simply not producing enough of a return on investment fast enough. The main number to watch tomorrow is Azure growth. Management is guided a 37 to 38% growth rate in Azure. If that comes in over 39%, it is going to be a green light for bulls to rip the cord tomorrow. Now, if that comes in under 36, it's going to say the constraints still exist and they're just simply not going to have the return on investment that was previously predicted. Now, secondarily, the market is absolutely tired of hearing that there's interest in AI. They want to see average revenue per user expansion tomorrow. So what they're looking for is proof that the enterprise is willing to pay $30 a month for Copilot Wave 3. If productivity and business revenues beat the $34.4 billion consensus, that will confirm that Copilot is finally paying for itself rather than just being some expensive experiment. The third thing to look for tomorrow in Microsoft's earning is cloud gross margins. It needs to stay around 65%. A dip below 64% is going to spook investors and say this whole AI thing is just too much of a low margin business. Now, from a technical perspective, I like Microsoft a lot. It's formed a bull flag after a nice run about a week and a half ago, and is now currently sitting right above support of 428. That number of support, previously resistance, stretches all the way back to 2024. So this is a long-term support resistance level. The gap we talked about earlier from last quarter's earnings went from 480 to 440 and kept dropping all the way to 360. It would be great if Microsoft hit the pedal to the metal tomorrow and was able to significantly close that gap. A lot of money could be made. Now, the way I'm playing this is not with Microsoft. If Microsoft pukes on earnings tomorrow, then I think the better play is with CRM to the downside. And if they crush it on earnings tomorrow, I think the better play is Oracle to the upside. But look, make no mistake, this should be a significant mover tomorrow in either direction. We're pinched between the 50 and the 200 to above, and that 200 is just below the gap. A bad move tomorrow could bring this all the way back down under 400 quickly, whereas a good move tomorrow could bring it all the way back up close to 480. It's going to be awesome to watch. Okay, so now let's talk about Amazon. Just like Microsoft, they beat on revenue last quarter, and their stock dropped 10% due to management issuing a $200 billion Capex plan for 2026. Back in March, Amazon announced a $50 billion deal with OpenAI, making it the third-party distributor for an OpenAI frontier. Now, investors want to see the receipts. Analysts are expecting 25.6% growth in AWS. If that comes in over 26%, it's going to say to the market that AWS is clawing back market share from Azure. Amazon management guided 16.5 to 21.5 billion in operating income. That number needs to come in over 21 to show that it's subsidizing the AI build out. Now, the dark horse with Amazon is the Trainium 3 chip that they're building and developing themselves. Any external customer adopting that chip is going to be an unexpected boon for the stock tomorrow. This is the weekly chart of Amazon. And as you can see, we're now in price discovery after recently, in the last 2 weeks, breaking through a major resistance level of about $250. Long-term support is about about $170. Just to give you an idea of where we're at. The MACD is in a bullish crossover, and this is again the weekly, right? And the yellow line here is just now coming over the zero line, and the RSI is up over the 50 mark, over the 60 mark, yet to go into the overbought territory. It's hard not to like this Amazon setup. Any of the things we've talked about in earlier with regards to bullish surprises tomorrow could send this stock further into price discovery. And there's no resistance above. We're in blue sky. So for me, it's worth taking a play on this, a small option play for a couple weeks out with a strike price near at the money right now to see what happens. So now let's talk about Meta. And let me hit the punchline first. I'm not touching this one. I did an earlier video on why that is, so I won't go into all of the specifics again. But management's guided 115 to 135 billion dollars in capital expenditure this year, being front loaded on the first half of the year. If management raises that Capex guidance above 135 billion and without a corresponding raise in revenue guidance, that's going to be a big problem. My fear is around margins with Meta. Margins are expected to come in between 40 and 41%. If that dips below 38%, it's going to be look out below. And my fear is this announcement of layoffs last week, and I noticed just 8,000 people in a huge company. So it could very well just be some house cleaning. But my fear is that they're trying to get ahead of a margin story tomorrow that simply is not going to be enough to put lipstick on that pig. Now, even from a technical perspective, this is probably the main reason why I'm not excited yet about Meta, because it looks like a head and shoulders here, a double top back from over the last year's summer, I guess it was, and then we clearly have a high, a low, a lower high, a lower low, and here we are. If we go down from here, it's forming yet another lower high. There is a long-term trend line going down from that summer peak, and tried bouncing up against it once earlier in this year in January and came down significantly. And we're bumping right up against that, also being squeezed, by the way, against the 50-day moving average, which is now sitting at about 677 or so. So in order for me to get excited about Meta, first of all, take all of the fundamental stuff that I've reported on earlier in the week, take that off the table. From a technical perspective, I need to see a close and confirmation above this trend line. We're above the 50. We're bumping up against, I'm sorry, we're above the 200. We're bumping up against the 50, albeit on decreasing volume as well. We have a bullish crossover on the MACD, and the RSI is over 50. So there's some things technically to like. I just need, maybe the metaverse is still on my mind, right? I need Zuckerberg to show me the money, to prove it to me before I'm going to invest $1 in this. Okay, so last but certainly not least is Alphabet. Alphabet has a bit of an accounting hurdle to jump over because this quarter they're actually expected to decrease earnings year over year. And that is due to this massive expenditure of AI data centers. So for the stock to go up, what Alphabet needs to do at a macro level is prove that they're growing fast enough to outrun their Capex. The primary way to measure Google's AI success now is in cloud growth. Last quarter, it grew 48%. It needs to grow 50% this quarter to show to demonstrate the success of the TPU version 8 chip and that they're stealing customers away from Amazon and Microsoft. Look, the biggest fear right now with Alphabet in general is that Gemini, the use of Gemini, is taking people away from clicking on ads. So they need to show significant growth in ad revenue as well. Now, from a technical perspective, I got to tell you, I like this setup. It's, again, in price discovery, just now this week breaking above its prior resistance of about 350. It's sitting just a hair below it right now as I record this. A full Fibonacci extension, 1.618 extension, is to about $390. And that would be my short-term target, believing that somebody thinks that there's some surprises coming out of Alphabet tomorrow. We have a bullish crossover this week on the MACD, and though the RSI on the weekly at least is still below the overbought territory, it certainly looks like it's trying to go there. So from a technical setup, at least on the weekly, I really like it. And I switched over here to the to the daily as well, just to get a finer point on it. And you can see it has gone above that recent resistance line just in the last 2 days and it's still not confirmed it yet. And remember, when I say confirmed, I want to see a break above that resistance, and then I want the next day's bar, the wick of that next day's bar, to be above the previous day's wick, and that did not happen today. So it'll be interesting to see if we get that going into the close tomorrow. So this is not a confirmed breakout by my rule book yet, but it's looking to do that. And if we do that, we go up north in price discovery. I am buying Friday dated call options on this. Not many, just to dip my toe in, because I think with this setup, there could be a positive surprise coming out of this. And a positive surprise with no overhead resistance can send that price discovery into something that can turn into a lot of fun. Whew, okay, so that's what I got. Now you know my plan and how I'm thinking about tomorrow after the close going into the rest of this week. I hope you got something out of it. And if you did, please subscribe, like, share with your mother. I greatly appreciate it. Again, don't do investment advice off of some schmuck you watch on YouTube. Do your own research. I'm not a financial advisor. You know the whole drill. But thank you very much for watching. I hope you have a great rest of your week. And of course, by great rest of your week, I mean profitable.